welcome. Hold on. I think my mic is muted. Okay. So, welcome everyone to this all-weather strategy discussion. We're going to be talking about the November performance of the strategy. And as usual, if you have any questions or anything like that, feel free to ask. So, before we get started, get your coffee. I have my afternoon espresso, and it's delicious. A delicious Coffee Works espresso. What are you drinking? What are you eating? Hopefully, you are relaxing, and you're at home, you're at the office, you're in your car, and you're listening to this, and you're sipping some tea, some coffee. What about you? Did you have your lunch? I didn't have my lunch yet because I had a big breakfast this morning with my mother. And then after breakfast, just been working like crazy. So it's been a busy morning. So we're going to get started. But before we do, just remember, ask your questions in the chat. Happy to take any questions that you have. So let's just look at some of the comments that you guys. John Pence says, all right, hold on. John Pence says, hi, hello there. And I just got back from Chiang Mai. I was in the mountains of Chiang Mai with my mother's at a beautiful resort called Ban Piman. I think it was. Yeah, that's it. It was amazing. All right. And Floyd says, hello, Mr. Andrew. And let's see. Bean Craft Finance. I'm brewing a drip coffee. Ooh, that's good. What type of coffee? I just had a drip coffee from Ethiopia, which was delicious. All right. Also, yes. Warm water. Warm water is good. That's good. I drank a lot of water. In fact, you can see I drank liters of water. Liters of water. Boba tea from Ari. Yeah. All right. And life is short. Sawadee krap. Ajahn Andrew, good to see you. All right. And yep. Supercon, nice to see you. Good afternoon. It's in the holiday season now. In our house, my mom and I just put up the decorations for Christmas. So we're really excited about that. Kunatip says, Sawadee krap, Ajahn Andrew. And here we say, Supercorn says, my customer asked why you pick SCB Global as high fee than other ETF. Excellent question. And I'll actually have some information on that. But part of it stems from the idea that when we invest in the bonds, we're investing to reduce, we're looking for things that can reduce the downside. And so that's the best that we can find. But I have news for you that I'm trying to develop a better bond fund than what the best that we can find, which is SCB Global. And yeah, so let's see. Yeah, maybe Ethiopian natural coffee. Yes, Ethiopian's amazing. I've made an idea for myself for 2025. I want to go to Africa. Have you been to Africa? I want to go to, taste delicious Ethiopian coffee, but just want to see my students from the valuation masterclass, which I have so many students now from Africa. So here we are. Remember, ask your questions. Yep. So, by the way, if you're in Bangkok, let's meet in person next week. I'm doing an event here. It's called Unlock Your Business Quality with Dr. Deming's teachings. I'm going to be doing this at a Sok area. So if you're around, this is all about how to apply quality into a business. And it comes from the teachings of Dr. Deming, the father of the quality movement. And so, yeah. Our allocation strategies, remember, are global, they're long-term, and they're diversified. So remember why we're here: to build wealth over the long term. Now, I see 6 pillars of wealth. First, invest in stocks. Stocks have returned much more than bonds and gold over the long term. And owning a piece of a company means that you get a portion of what that management team creates. Number 2 is reduce risk, overexposure to any single asset by spreading your portfolio across various companies, sectors, countries, and asset classes. In fact, Alex is listening in. I think we need to fix the grammar on this. Overexposure to any single asset class by avoid it. Number 3, contribute regularly. Reduce stress by applying dollar cost averaging, consistently investing a fixed amount over time. And this takes advantage of volatility and likely lowering costs and enhancing long-term gains. Number 4 is stay invested. Think long-term. Be patient. The benefits of compounding happens over decades. And number 5, maintain discipline. Follow your investment plan to avoid acting based on emotion. And finally, number 6, deepen your understanding of investing and stay informed about market dynamics and refine your investment strategies by learning from successes and failures. In fact, I'm gonna go back to my books right here. These are my books on finance right here in this area right here. Those are my main books, as well as down at the bottom. Those are the main books on finance, but I've read, thousands of books in my life, and I see books as a real great chance to improve myself. Now, we create our strategies for many decades, but even a decade is not even long-term. This is when I was a kid. This is when I came to Thailand, and this is me at 100. Our aim is to create strategies that perform over many decades. Now, remember, you can buy the book, How to Start Building Your Wealth, Investing in the Stock Market, or you can take the course. And this is the foundation of a lot of what we're doing. Now, our target is to deliver steady returns over the long run. AWS, the red line, was launched in February of 2019, and we target 6% per annum. AWAF was launched in October of 2021, and we target 8% per annum. And AWIG was launched in July of 2022, and we target 4% per annum. Now, since all-weather inflation guard started in July, we can rebase these back to the starting point of July. And we can see that the moderate risk AWS has returned slightly more than the higher risk all-weather alpha focus, which can happen at times. And inflation guards have had the lowest return, but also the lowest volatility. Inflation guard is meant for very low risk. So since July of 2022, all strategies have had their lower volatility, have had lower volatility than world equity. Since we're mixing asset classes, we're trying to avoid some of the downsides. As you can see, that black line shows the downside that we missed. But we also can see there's upsides that we will miss at times because we're blending asset classes. And if somebody says, but Andrew, I want that upside, it's better to go get that upside yourself. Just buy one global, equity and get that. But if you are caring about the long term and carefully building over time, keeping in mind that falls and significant falls can be very damaging, then stay with us. All right, let's go through it. So inflation guard gained 1.9%, pretty incredible. AWS gained 0.4 and Alpha Focus gained 1.0. So let's see, since inception, AWS was up 48.3%. And that's 16.8% above a 60-40 portfolio. And remember, this is after fees. In November 2024, the strategy was up 0.4%, which was 2.2% below the 60-40. Pretty bad performance in November. Our 25% target weight to the US did great. And our 25% allocations to gold and global bonds were a drag on performance. The strategy has added about 5% year to date compared to 60-40. As we can say, year to date, we're at 12.5% up versus 60-40 at 7.5. This is a new chart that we've added, a new table to help you understand the year on year, as well as the cumulative, which is the first bar. All right, let's go in and look at Alpha Focus, and we can see the strategy has been up 5.3% since inception. And that's 6.3% above a 60-40 portfolio, which is what we're going for. And here we can see it's 3.5% below world equity, but with a lot less volatility. Again, we're trying to eliminate that volatility. On the downside, you can see the green line. We had a moderate equity allocation target at 68%, which led to a lag because world equities rose very strongly. Here we can see the strategy was up 1% in November, which was 1.6% below the 60-40. Our world equity fund outperformed the index, and our big tilt to infrastructure did well too. But our tilts to healthcare, gold, and global bonds did poorly for sure. Here you can see the strategy has added 4.7% year to date compared to 60-40. And again, this is after, because we're looking at the value of the NAV of the funds, this is calculating after fees. So now let's look at Inflation Guard. The strategy was up 9.8% since inception and 6.9% above a 40-60 portfolio over that time. Great performance. Again, the 40-60 is an equity. You can see PGE and SCB Globe. And ultimately, we've done better than that after fees. The strategies also experienced less volatility. Here we can see in November, the strategy was up 1.9%, which was 0.1% above the 40-60 portfolio. Global bonds were slightly up, and our 5% tilt to world financials did great. You can see up 9.4% in the month of November. So we really did well with that little allocation that we did. And our world equity fund outperformed the index. And world REIT was better than global bonds. But gold was the drag, down 4.6% in the month of November. Here you can see the strategy has added 0.4% year to date compared to a 60-40. So we were up 4% so far, and 40, that should say 40-60. And the 40-60 was up 3.7%. Cumulatively, we've been up 9.8, and the 40-60 was up 2.9. So we've added value of about 6.8. So let me stop there, and I'm going to just look at some of your questions that you have. So hold on one second. All right. So Phenomena FA is waiting for your view on this time on AWS impacting my clients. Yeah, it's coming up. We're going to get there, and I'm going to show you the changes that we made. B Global is the one. And Alex, I think that I've asked Alex to help me with this, but let me have Alex give us a little bit of information on B Global. All right. This is the first time I see you overweight China. It should have very clear driver behind. Can you share more? Yes, I'm going to share a little bit more on China in just a bit. But remember, we have not been overweight China for a long time. Also remember that we're using the fund that we've created that strips out China and allows us just to look at our allocations to China and without overdoing those allocations. So we want to see your China in detail. No one else is recommending it in right now. So I'm going to talk more about China towards the end of today's session. Also, but you are right, most of the time, amazing track records when no one else has spotted the opportunity. Yeah, so we are more positive on China, and I hope that we can find a good opportunity. And how do you see Trump administration, inflation up, and will make interest rates remain? Okay, I'm going to go into all these questions towards the next sections of the presentation. So be global, just so you know. Let me say global. Okay, and so let's get into this. Let me now bring back up the presentation, and so obviously it's a huge victory for Trump. Republicans won the Senate and the House, so Donald Trump is scheduled to be inaugurated as the 47th U.S. president as of January 20th, 2025. Trump has said he's will bring peace to Ukraine, and I expect the U.S. to be less warmongering under Trump compared to under a Democrat presidency. It turns out the Democrats are the party of war, and the Republicans now seem to be, at least under Trump. I wouldn't say the Republicans. I would say Trump is the party of not war. And I think that this stopping Ukraine could lead to reduced geopolitical tensions, but it will take time and uncertainty will remain. But I would argue, in fact, 2 days ago, I had a lunch with a Russian friend, and we were talking about this. But the main thing I would say is that Trump will end the conflict between Ukraine and Russia very quickly, probably by the end of January. And America first means likely more tariffs on Chinese goods. I expect Trump, we expect to see a Trump thump. In other words, he's going to put some pressure on China. Trump will start by hitting China hard with tariffs or talk about them to get the Chinese to play ball. And in a good scenario, this leads to reduce U.S.-China tensions. I would say the tensions between U.S. and China right now have been pretty tough, I would say. And I'm hoping that Trump will resolve some of that. Now, central banks battle inflation while trying to avoid a severe recession. We can see, though, that 3-month global bond yields are coming down. And the 3-month government bond yield has fallen to 5.1% from 6.3%. Again, this is across the world that we've calculated ourselves. And rates came up quickly. Inflation has come down, and rates have fallen a bit. And we expect continued lowering of rates. So bonds are typically a safe place to be in recessions. Safer assets like bonds typically have performed well. And though with high inflation, low yields could still lead to negative real returns, we generally don't allocate to bonds to speculate on the upside, but rather use it to protect capital over time. So, Supercorn, I was originally thinking that you were asking about SCB Globe, but I now realize you weren't, and I will have an answer to your question in just a bit. But here we can see that the correlation of SCB Globe relative to world equity has been falling, and that's what we want. We want that correlation to be as low or even negative if possible. So the correlation has fallen recently, and the market prices in a 74% probability of a 2.25% cut by the Fed at the next meeting. The market has started to expect higher rates for longer. This reflects expectations of a stronger U.S. economy following the Trump presidency with tax and regulatory cuts. ECB and BOE are expected to cut slowly as well, as we can see here. So only the Bank of Japan is expected to raise rates slowly, but still extremely loose. And given this expectations of slower cutting, we reduce our bond allocations in AWS and AWAF. So Chalermpat, that partially answers this question that you asked. Why did you reduce the bond position from 25 to 5%? Do you think the rate has reached the bottom? I would say my answer to this question, I'm going to just talk to you for a second about this one. My answer to this question about the bond portfolio is that it's a little bit tricky right now because with Trump coming in, I think there's a potential that the equity market can really run. And if the equity market really runs, I don't want to be in bonds. Even though bonds may do better as interest rates fall, equity would do much better. So I would say that's part of what we're thinking about in relation to bonds. Also, if Trump can get the economy to do better and better over time, then the stock market does better. And then there's less need to bring interest rates down to zero, which is where I was thinking that they were going. So that answers a portion of your question. If you have more questions related to the bond position, it's not so much that I think the rate fall in rates has ended, but the perception of the fall in rates now is in the price of the bond market, in my opinion, at this point. So that would be my answer to your question. Feel free to ask for more explanation there. So I want to come back to the question that Supercorn asked about the equity fund. So let me just look at that for just a second. So to answer your question, we do typically look for passive funds, but when we find active funds that appear better for our strategies, then we use them. And B Global has outperformed passive alternatives in the past year, so it's been a better choice. Alex can share a link of the comparison on Phenomena's website. In the past 1 year, B Global has returned about 3 percentage points more than the passive alternatives. So that's part of why we went to B Global and have remained there at this point. Let me continue on, and then I'll come back to you. So oil prices move sideways as supply remains good, but I expect that we are going to see that oil prices probably stay down thanks to Trump coming in. And the conflict in Ukraine and the Middle East could lead to supply shocks and push up oil prices, but new U.S. sanctions on Iran or Venezuela could also act as a catalyst. But if I was betting on it, I would bet that over the next 12 to 24 months, we'll see probably oil prices coming down because of Trump. So the global economic growth outlook remains uncertain. We still think the main upside in commodities would come from a supply shock, adverse weather conditions, or significantly higher demand due to improved growth outlook. We add a 5% target allocation to commodities in AWS, but no allocations in Alpha Focus and AWIG. And basically, if inflation starts to really come back, then we may end up increasing the allocations to commodities. But for right now, we're at 5% from 0. So we've increased it slightly. So we see high and rising government debt, and that can drive gold price, which we've been seeing. High debt often leads to concerns about inflation, as government actions to tackle the debt burden often increase inflation. And rising government debt in major economies can raise concerns about credit quality and stimulate the gold price. Now, we also expect central bank demand to remain strong, as we've seen here. In 2022 to 2023, the total demand from central banks and other institutions was almost as great as in the 5 preceding years. We think the momentum can continue and also like to keep gold as insurance. So I'm going to grab my pen here for just a second and use it. We can see this fall that we've seen in gold price recently. And I would say that that's part of that is because Trump getting elected now, people are thinking that the debt situation in the U.S. and the U.S. currency is going to get stronger. In fact, I was just at Coffee Works today signing a contract for 10 million baht of forward purchases of U.S. dollars. And my perception at this point is that the U.S. Dollar could get stronger for the next 6 to 12 months. So it's time to announce our new allocations, and this will give you some answers to some of the questions that you had. So for all-weather strategy, we increase equity to 65% and reduce bonds to 5%, and we add in 5% to commodities. We're keeping the U.S. at 25%, and we're increasing China equity to 25%, a big bet on China. We've exited emerging markets ex-China, and we're keeping gold at 25%. So investor bullishness is supported by double-digit earnings expectation. And sentiment for U.S. equity is rather positive, as EPS growth expectations are around 10% year on year. This could support further upside in U.S. equity. I think very quickly the Republican House will pass legislation to reduce the tax rate, and that'll cause this EPS to grow up even more. And the U.S. market is typically resilient. Even though the U.S. is facing many challenges, the market is typically considered safer than, for example, emerging markets. And during market turmoil, capital typically moves towards the U.S. And the U.S. also appears stronger than other developed markets like Europe and Japan. So we're keeping our allocation 25% to the U.S. Still, around 65% of MSCI World is in the U.S. and 30% of our equity allocation is in the U.S. So we're definitely underweight overall with the U.S. And part of that has to do with the valuation. Now, strong dollar typically hurts emerging markets and vice versa. So if we do think that the dollar is going to be stronger, then we are going to have to reduce some of our exposure to emerging markets, which we've done. And as the U.S. has strengthened again, we exit emerging markets ex-China. So let's talk about Chinese stocks. They've started to move, of course. China continues with easy monetary and fiscal policy to stimulate the economy. It's unclear if the economy has bottomed yet. The latest announced stimulus package aims to get local governments to refinance some of their hidden debt, and this should reduce the interest burden of local governments and unlock spending. And new stimulus announcements are catalysts. So let's talk about that Trump thump on China. Trump is likely to play hardball with China and threaten with or impose more tariffs. However, Trump is looking for a deal, not a war. The Chinese government seems to be prepared to deal with tariffs, and Chinese companies have done business under tariffs before. Much of the negative is already priced in, and I think that China can surprise on the upside. So that's why we've raised our target allocation to China. Now, I'm going to come out of this for a second and talk just briefly about China, because I know we got a question about China. Let me just go to the questions here for a second. Let's see. Here's a question. Why did you increase China to 25? Did you use the FVMR model for the change? Also, why do you prefer A shares over 8 shares? So yes, we always use the FVMR model when we look at the markets, always. And so you are correct in saying we use the FVMR model. Now, if I look at China for a moment, first of all, A shares are the best pure play on China. And that's the reason why we generally will look at A shares. But we still considered from an FVMR perspective, 8 shares versus A shares. But we saw a better opportunity in A shares for this period. Now, to discuss China just briefly in relation to the Trump presidency, what I would say is that I think under Biden and the Democrats and the State Department under Blinken, they just kept putting pressure on China. And I think that there was no end to the pressure coming on China. And therefore, many U.S. investors like pension funds and the like just couldn't allocate to China because they were afraid politically that something's going to happen. Now, what I see, and unfortunately, I see that most of the senators and Republican senators and House of representatives, that they are kind of anti-China. And so there's a lot of pressure. But I would argue that that pressure has kind of reached a peak. And under Trump, I would expect that Trump wants to cut a deal and get things going again with China. Why is this significant relative to the Chinese market? Because, you know, one of the things about the Chinese market that's interesting, it's a lot like Thai market right now. Thai people don't trust the Thai market. It's going to be foreigners that are probably going to lead the next rally in the Thai market, and then locals are going to get back in. It's the same thing with China. I think that many Chinese people are very skeptical about the market, but if foreign investment starts to come back into the market, then you'll see the market fly. And so from an FVMR basis, I think the Chinese market looks interesting to us. We haven't been in it for a long time. Remember, we never got stuck in it ourselves, and so therefore we don't have a negative feeling on it. Hopefully that answers some of the questions that you've asked there about China. So another question from John Penn says, will China be negatively affected from Trump's policy? No, I think China will be positively affected because it's going to end this kind of endless pressure on China. They're going to come to a deal and they're going to start trading again and investing again, right? Another question is, do you still see upside in big tech companies that makes your all-weather alpha focus port switch be Innotech to 22%? Yeah, I still am going to keep that position for right now. Another question was, how about India? Yeah, right now, when other markets are hot, I just don't see India as attractive on an FEMR basis. Another question, how do you see Trump administration more inflation and move inflation up, and will it make interest rates remain at this point for long? So I would say that under Trump, he's going to push the Fed to lower rates as low as they can go because he wants to set the economy on fire. I don't think he cares about, the future or something like that. I think he probably cares about firing it up right now. If he has his way, the Fed will be reducing rates pretty significantly. Now the question is, does that drive inflation? Well, we have another impact that's happening, and that is government spending is being pulled back potentially by the Trump administration. And with less government spending and more money going back to the taxpayer from tax cuts, I think you could argue that there's going to be less of a stimulus into the economy from that government spending. So at this point, I don't see that inflation is going to get out of control in the next, let's say, 12 months. I do have a small 5% allocation, as we talked about, to commodities to kind of protect us from that. But ultimately, I would say I don't think we're going to have inflation coming back, right away. And so that's my thinking on that. Let's continue on. 1 second. We've got some other questions. Sam says, I bought AWS last week, and next 2 days there was a port update. Should I update my port because I will be charged twice? Yeah, it's a problem. And unfortunately, when you get into the portfolio just before change, I can't control that, unfortunately. I think the way that I would look at that, Sam, is that ultimately what I would say is if you follow my strategy, you have to rebalance into it. That's up to you and your situation. But if you don't follow it, then, and the way I would look at it is that hopefully it's a small amount that you're allocating on a regular basis. And so, yes, it can be a bit painful, but it's a small amount to what's going up over time. That's the way I would look at it. But, you may want to talk to your advisor also about it. How does Trump able to manage deep state power? Seems that they like to keep war and conflicts around the world. Yeah, you're exactly right. The State Department and the CIA, in my perspective, are two entities that have been pushing everywhere against democracy and war and for war around the world. And they have a long history of it. It's going to be very difficult for Trump to deal with this because there's so much power and money involved. In theory, he's going to cut the budget of the CIA as an example, and that is a big part of the deep state. But I do think that we've seen it before, that the deep state will fight back against Trump. We saw it with many different things like the Russiagate situation where he was accused of colluding with Russia, and the deep state supporting the Hunter Biden laptop story. Many things are going on behind the scenes. I think one of the ways that they're going to deal with this is Kash Patel, one of the people that he's talked about. And he's getting, basically the way he's going to handle this, Supergone, is he's going to get all his people in place. So on day one, they're going to go. And I'm hoping that part of what they're going to do is dismantle some of the CIA and the war machine and the State Department. part of the other part that I think is an interesting way of thinking about this supercoin is that I went on ChatGPT and I asked the question, what is the political affiliation of the majority of people in the federal government? And it came up with a lot of different research, and I went through a lot of different research, and what I came up with is about 80% of the people in the federal government are more liberal or Democrat voting. That means only 20% are Republican. And those Republicans also may be clustered in, let's say, Commerce Department and things like that. And so my expectation is what's happening is that they're going to reduce the size of the federal government to reduce the power that Democrats have through the federal government. And I think that's how they're going to try to attack the deep state. All right. Seems more uncertain in the Middle East after Syria. Yeah, the Syria situation is interesting. I didn't expect that Assad would be leaving, and that kind of definitely surprised me. And it's interesting because, you know, Russia just can't help out now that they're focused on Ukraine. But I think the Middle East, the deep state in America have always wanted to destabilize the Middle East. And the benefit of that is that they can get oil and the like out of there. But I don't have a strong view right now on what's happening there, except that the U.S. just generally goes for chaos in the Middle East. Chalurmpan says, AWS doesn't think gold has lost its price momentum. What's your outlook for gold? Yeah, it's interesting about gold. We still, from an FEMR basis, gold still has a place in the portfolio. Obviously, it's underperformed recently because of the Trump election. But we still have problems. And so gold still has a place, particularly the Democrats could come back and try to do some political disruptions. Also, you saw Trump make a statement about BRICS. Recently, he had a quote, a tweet saying, if you try to create a BRICS currency, you're not going to get access to the U.S. market. Well, that's an interesting one. And actually, BRICS has not created a currency, and it doesn't look like they're going to create a currency. Instead, they're going to try to continue to support bilateral trade, where Russia can trade with, Brazil, as an example, in their own currencies rather than converting to the U.S. dollar. And that's what they're working on. But Trump is threatening them. It's the same old style of threatening, saying, don't do this or you're going to not get access to the U.S. market. But what I would say is that if Trump really wanted to make the U.S. dollar strong for the next 10 years, he would basically stop the sanctioning, the use of the U.S. dollar sanctioning as a tool that's been used from a political perspective by the Democrats. Stop doing that. And if he can do that, then I think countries would be back into the U.S. dollar because it would be a neutral currency for exchange. Very hard for the U.S. to do that, but that's the best hope for the U.S. dollar. Chalurmpat says, in AWS, don't you think U.S. equity is overvalued? So wouldn't it be better to allocate to other positions? Well, first of all, you can see, I've already shown you that the allocation in an all equity portion would be 68%, I think it was, that I showed. And the point is that at 25%, we're already low in our allocation to the U.S. And so I don't really want to go any lower with the U.S. right now, because even though it's expensive, it can still fly, right? And so that's why I still have some position in the U.S. Let's say Supercoin says, how do you view Japan with new cabinet? Will it make Japan turn a downtrend? It's very hard to get positive or excited about Japan right now from my perspective, particularly because it's really the U.S. over the next 6 to 12 months that's just going to be pumping. No interest on Japan and India. Yeah, no interest right now. Exactly, ABB. And what's your outlook on Asia Pacific ex Japan? So basically, if you look at our allocations, let me just go back to 1 second. Hold on. So Japan, we're still at 5% for AWS. And I suspect that that's where we're going to be for a long time to come. I think I need to get back to the presentation so that I make sure I get through it. So Alpha Focus, a lot of changes here. We've increased equity to 95%. So Chalernpat, this tells you that here we're getting very aggressive. So if you feel positive, let's say, about global markets, then this is the place to be. And to answer the question, what about Asia ex Japan? You can see that, in fact, we went to 22% for Asia ex Japan in this latest rebalance. And we raised Infotechs and gold miners to 22% from 3%. And we reduced healthcare and infrastructure to 2%. And we've exited India. We've reduced global bonds to 3% and gold to 2%. So here again, we're getting very aggressive on equity markets. So a strong dollar and geopolitical tensions are challenges for the region for sure, though the US-China conflict can lead to relocation of production to Asia, ex-China. AI and EVs need semiconductors and batteries, and Asia produces most of these. In addition, the region produces many essential commodities and stands to benefit from rising commodity prices. So, as mentioned, much of the negative is already priced in China, and we think China can surprise on the upside. So we've added a 22% target allocation to Asia ex Japan, Asia Pacific ex Japan. And at least one thing is different this time compared to the late 90s, and that is that many of the big tech companies are quality companies. These companies have high ROICs, strong balance sheets, and quality stocks should be better in an environment of high interest rates. So Infotech has driven the market, and we think the momentum driven by positive AI sentiment can continue and raise our target allocation to World Infotech to 22% from 3%. And precious metals don't always move like overall commodities. Gold and other precious metals, to some extent, can gain from uncertainty and recession. Palladium, platinum, and silver have industrial applications and are important for green energy and EVs. Precious metal miners can benefit from sustained high prices. These are rough estimates of the profit miners on average can make at current prices based upon the different ones. Miners are also expected to move with a beta of greater than 1 relative to spot prices. So we add 3% here. Miners are expected to move with a beta, as I said, greater than 1. And if gold price rises by 1%, gold miners are expected to rise by more than 1%. And since precious metals appear attractive, we decided to execute this trade through miners and raise our target allocation to 22 from 3%. Woo! All right, next, inflation guard. Only a small change that you can see is that we kept equity at 30% and we've increased gold to 10% from 5%, and we exit REITs. We keep a 5% tilt in World Financials and World Infotech, and financials, to benefit from a more stable rate environment, keep 5% in World Financials. While interest rates might be lowered, they're likely to remain high for a while, which should benefit the earnings of financials. Financials continue closing the gap since the U.S. regional bank crash in March of 2023. So before we get into more of your questions, which keep asking, that's great. The Valuation Masterclass Bootcamp 19 starts on the 6th of January. We help finance professionals become valuation experts in months rather than years. And we have many previous attendees coming from FINNOMENA. Here are some of them. Some of them are advisors like Chachada and Tosapon and Takon. And some of them are investors there. Jutamas, as an example, Bunsim and Pongsakon as other examples. In the Valuation Masterclass, it's a 6-week guided intensive online valuation bootcamp. Daily live sessions, team support, progress tracking, and you end up writing and presenting a professional valuation report. So we get you'll get an extra $100 off any price point and some great bonuses. Just use the code FINNOMENA. And it may not be suitable for you, but it may be suitable for your kids. So let's get into Q&A. All right, hold on. Okay, now let's go through some more questions. I see some questions here. Hold on. Will small caps get benefit under Trump? I hope so. I mean, small caps are being killed, and they're being killed because large caps are doing so well. I would say COVID was a major disaster for small cap companies because they got wiped out. So I would think that we should see some outperformance coming by small cap stocks in the U.S. Is it, but it's so hard. It's been such a painful bet to bet on small caps. But I do think hopefully we've reached a peak of underperformance for small caps. Will Alpha Focus outperform AWS in 2025? Salaya DC, that's a hard question. I hope it will, because I know Alpha Focus really needs, we're heavily weighted, as you can see, in equity. So if equity does well, Alpha Focus should do well. After Trump officially be president next month, how's the outlook of commodity products such as gold, crude oil? Moreover, how's crypto going? Yeah, I mean, crypto's on fire, and it probably still will be on fire because Trump is in favor of it. And so Trump sees it as an opportunity to become a leader with crypto. And so I would expect that crypto will continue to do well. As far as gold and crude oil, I mean, it's hard. One of the hardest things about following a methodology like FEMR, sometimes the methodology will put you into things that you don't feel like it should be. And sometimes right now you could argue, well, why be in gold? The purpose of gold is already filled. Yeah, possibly. But if my model, my FEMR model, signals to increase or remain in gold, as an example, then I'm going to follow it and see where it ends up. All right. So yeah, got it. That's why Trump invite Elon Musk to reduce the government process, right? I don't think that Trump's trying to reduce government spending for the purposes of balancing the budget, and I don't think he's doing it for inflation. I think he's doing it to improve the chances of getting elected for Republicans in the future. Yeah, Alex has all the code stuff in there. Will you consider a change from B Innotech to KT Technology? Same master fund, but KT is cheaper fee. Actually, it's a good question. We will definitely look at that. I'm going to take a note of that right now, and feel free to suggest like that. And if we do find that it's better, we will do that. So we'll look at that. ARK, Mr. Cowboy. What strategy should we use to invest in the South Korean stock market? Is there still a chance it might drop further? The South Korean stock market is a value trap. Never look at the South Korean stock market's valuation as a reason to get in. And this is because it's always been cheap. And it's always been cheap for a reason. The chaebols, as an example, and the consolidation of power, the fact that the return on equity has always been low and they haven't returned that much to shareholders. So the way to think about Korea, in my opinion, is when you see momentum in the Korean market, yeah, you can consider riding that momentum. But as far as investing, don't invest in Korea based upon value. That's my answer. Petra Pan, do you invest in WTI oil? What are your thoughts? Well, we have oil exposure to, that you can see through our commodities. So that's how we do it. And I would say that oil prices should be coming down over the next 12 to 24 months because of drill, baby, drill, and trying to get more oil out there. Weena Tungchana Chai Anan. I'd like to hear your view on cryptocurrency in 2025. My answer to cryptocurrency questions that I always get is, I would allocate between 0 and 3% of your portfolio to crypto. Unless you're super rich, right? And it just doesn't matter if you lost 10% or 20% of your portfolio. There are still risks related to cryptocurrencies. It's much more volatile than stocks, as an example. So personally, I wouldn't recommend cryptocurrency. because I do all my work on stocks, bonds, commodities, and gold. And I don't do a huge amount of research on crypto. So I really can't provide you with a recommendation. But what I would say is that, when you find I wouldn't call crypto necessarily an asset class, because when you're talking about crypto, you're kind of usually talking about Bitcoin. And if you're talking about Bitcoin, it's hard to say that something is an asset class when it's only one asset, one securities, in this case, Bitcoin. So it's hard to say that it's an asset class amongst itself. So I would just say that if you like crypto and you see a future for crypto, which I think is increased because of the prior SEC chairman, as well as the government under Biden, they hated crypto and they did everything they could to stop it. So with the pressure coming off, I think crypto can fly. So therefore, I would view crypto as a side bet between 0 and 3 to 5% of your overall wealth, and know that, if everything goes right, you're going to be super rich. And we're going to have a beautiful coffee from your winnings. But if everything goes wrong and you lose 3% of your assets, as an example, if you went all in to my range of 0 to 3, then it's not going to kill you. That's mine. And I won't bring crypto into all weather strategies because it just complicates it for investors who really aren't interested in that crypto exposure. And for those people who are interested in crypto exposure, you can get that on your own pretty easily. All right. Beancraft Finance. How do you see China not a value trap compared to South Korea? Well, because South Korea just has a very long history of stagnant ROE. I think the Chinese are really striving. If you look at the Chinese companies in the stock market, there's a big diversification. They're not controlled by a small number of people or families, whereas I think Korea is a lot more. And I would argue that the Korean market is, Korean market's interesting because there's a lot of stocks. I think 1,800 the last time, so a little bit less than 2,000. That's interesting. But I think that the China market is just pushing for more listings and all the like. Do you still have, Charles says, do you still have AWS courses? Well, what I have is, yeah, I do have that. Let me just see if I can get that. I think Alex may have already shared it, but maybe, Alex, can you share the link for AWS course? Let's say this is the Build Your Wealth link. That's the one to share. Also, just so you know, Alex, Supercorn, Alex just looked at it and he said that KT technology has existed for less than 1 year. B Innotech that we use and this KT technology appear to have the same fees and the same master fund. So maybe double check your numbers. Happy to discuss that further. Okay. I think we've got all of the questions answered. If you have more questions, we've got a couple more minutes. Feel free to ask any final questions. I noticed that we have 34 people on the call. That's a big call, and I appreciate you guys all coming in. Feel free to ask any questions. We got a little bit of time left. B says, what do you think about the energy sector in Thailand? Is it time to buy, especially in clean energy? I'm really hesitant on clean energy, ESG investing, that type of thing, because I know that it's not necessarily going to be more profitable than others. Also, I think when I look at Thailand right now, the competition in the space of energy and utilities and the like is pretty competitive. So it's hard. In fact, one of the utility companies asked me to do some presentation to them about the performance of utilities and energy throughout the world and in Thailand. And what you can see is that energy and utilities did really, really well. IPPs in particular did really, really well 10, 15 years ago. And now they're coming down to an average level of profitability. And so therefore, it just makes it a little bit harder from my perspective. Now, as far as energy is concerned, obviously the Thai market is very energy intensive. And the result of that is that if oil prices go up, Thailand tends to go up. Those energy companies tend to go up. But I don't think that the oil price is really going to go up that much because of Trump. And so it could be that means that Thai energy companies just don't move that much. Okay, another, so what is AWS portfolio allocation in 2025? Well, Charles, the allocation for AWS is the one that we just went over. And that is, let me just, let me show you that. Let me go to that 1 second. So the allocations, the main allocations are 25% US, increasing China to 25%, exiting emerging markets ex-China, and keeping gold at 25%. We're at about 65% equities, and that is the current levels. So I don't really have a 2025 number. I just do it on a rolling basis, and I look at it every 3 months. Another question was out of healthcare. So let's just look at our healthcare position. So healthcare, we were at 17% in Alpha Focus, and we're now down to 2%. You could argue that not only are we increasing our equity allocations, right? This is the question, healthcare. You could argue that not only are we increasing our equity allocations, but we're also moving them to be a little bit more aggressive and getting them out of healthcare. And so that can give you some indication. We're making some big bets in Alpha Focus. So hopefully it works. All right. I want to take this last moment or so and say this was really awesome. 326 people on this video, which I appreciate very much. A lot of great questions, including some ideas about funds that we should consider for our different strategies. And I welcome those. So keep those coming. Most importantly, my goal is to continue to stay focused, stay disciplined, follow our FVMR strategy, rebalance and reconsider every 3 months, and consistently communicate with you what's going right and what's going wrong. So for all of you out there, I'll do my best to stay focused and not ride the roller coaster of the market. Instead, set my strategy and follow it. And I appreciate every one of you for your trust in me and my team for what we're doing. And I hope that you have an amazing New Year celebration. And let's make 2025 truly, truly a great year. I have a little secret, and that is my mother doesn't know it, but my older sister from America is coming to see her in the early part of 2025. And that is a beautiful thing for my family. My mother's been with me here in Thailand for 8 years. My sister's come once. So it's really important, right? So I did see one last came in from Tobu. I plan to switch portfolio from other planned phenomena to AWS. Is now a good timing to switch the whole amount, or do little by little. So there's 2 things that you want to think about, Tobu, in this case. The first thing is that now at the time of rebalancing is always the best time to get in, because as the months go by and we end up into the next 3 months, exhausting this 3-month period, there's less opportunity usually for outperformance. So the timing for investing is good right when we announce, as we have today. 1 month from now, when I go live, I won't be announcing any changes. So that's not a great time. As far as switching the whole amount or switching little by little, I really don't think I can give you a great advice on this, since I'm not really your advisor and I don't know your situation. So I would be careful about switching all, because switching all sometimes can have some problems with a lump sum. So I just don't know enough about your situation, but I would suggest that you talk to your advisor at FINNOMENA, who hopefully can help. So some last things to your family, from my family: happy family, ABB, and everyone. And Charles, wish you and your family have a great time in Thailand. I want to thank everybody for joining today, and let's celebrate a beautiful 2025 coming soon. Thank you.